Hey, greetings, Dwayne, CFRN. I'd love to spend a lot of time with you because I love you. I really do. But, man, we're busier than a cat trying to cover. If that, if you understand that language, if not, forget I ever said it. But we're busy, man, in a good way. I mean, things are happening, and thanks to you, you are CFRN. Michael and I, yeah, we coded some indicators and we developed a strategy by the grace of God with his hand at our back, his breath on our neck. But it's in you that it all comes together. It's in you that we are touching the world, changing the world, one life at a time, one tick at a time. So I'm excited. I want to do a recap. I want to get through it as quickly as possible. I don't want to leave you with unanswered questions, but I can't spend time teaching during the recap. And it's so hard for me not to because I know the kinds of questions that arise in a trader's mind when I show something or mention something. And so I want to go off on a tangent and chase that rabbit hole and blah, blah. I'm just going to do my best to deliver the recap in a straightforward manner. And then you email me with your questions, okay? support@cfrn.net. Or you can call. We'll be taking calls very late tonight. 949-42-E-MINI. One of the reasons we'll be taking calls so late is because our introductory offer is going to expire. Not the bonus that I did the countdown clock on the other day, but when we rolled out the one trade a day, we had an introductory offer that if you sign up now, you'll never experience a price increase ever. Okay? A lot of you took advantage of that. We're bringing that to a close at midnight tonight. Now, I'm going to be honest, the main reason we're doing it is so we can catch our breath because things have been busy, and busy's good. We love good. But I want to, those of you that are serious about becoming a part of One Trade a Day, I want you to get in there and get signed up and get all your NDAs on file. You'll have a little file folder with your name on it, your NDA in it, and the whole thing. Because then I know there'll be a breather, right? Until we roll out some other kind of a special down the road. And so I'm being honest. We always said that we'd be honest with you. You might not always like what we tell you, but we'll always tell you the truth. So that's the truth. We are ending the no price increase ever on the one trade a day at midnight. Now it's 5:35 where I'm at, Mountain Standard, 7:35 on the East Coast. By the time I get this uploaded, it's going to probably be 8 o'clock Eastern. And I'm going to send everybody an email so everybody will have plenty of advance. You'll have plenty of notice, okay? Now, not trying to discourage you from becoming a part of One Trade a Day. Absolutely, we want you to come and take part. Just know that after today, if there are price increases, you might have to pay the higher price. Now, for some who say, oh, well, gosh, that's the oldest sales pitch in the business, the price increase. Well, ask some of the original CFRN partners. Back in the day, when we first rolled it out, we had an introductory offer. I remember it so well because I had my iPad. It was on the front seat of the car. I was going to the dentist. And when the offer became official online and people could actually click and go make their payment and become a partner, it was all very crude back then. Not crude, but rudimentary. That's the word I'm looking for. My iPad was going ding, 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 because every time an order would come in, the way we had it set up, it would go ding, ding. I get in the dentist's office, and I'm there. You know how you take reading material with you. So I've got my reading material. My iPad is in the dentist chair, and my iPad's going ding, ding, ding. And of course, inquiring minds want to know, are you playing some kind of a game? I'm like, no, this is no game. This is the real deal. So the introductory price to become a partner back in the day was $999. True story. This is when I came back from Machu Picchu, and I'd been there to decide. Michael and I both kind of, he was in his part of the world, and I went there, and we were contemplating what we were going to do, because this business of CFRN and trading traders, we'd been doing it for free almost 4 years. So we had to turn it into a bona fide business model, or we had to scale it way back and focus more just on our trading. But of course, there was the option to do both. And it took that trip to Machu Picchu and sitting on the mountaintop to kind of see the clarity. God gave me the clarity to see how we could do both, how we could trade, how we could train. He just sort of mapped it out for me. He did a little brain mapping, and that's how we moved forward. Now, if you've become a partner of late, you know that the current retail price to become a partner is $34.97. So that's like almost a 400% price increase, if I did the math right. Math's not my strong suit. Well, it is when I'm doing the concierge trade alerts, when I'm doing the one trade a day, and when I'm doing the weekly trading zones. Math is very much my strong point. But Michael is our official math guy. He went to school for that, and he learned how to do fancy math. All right, I had a brief interruption there. Crisis. Fire put out. Now, let's get back to what we're doing here. I'm going to do a recap. I'm going to jumble them up. Probably wish I hadn't, but I'm going to. Concierge trade alerts and the one trade a day alert. Okay? Concierge trade alert for the S&P 500 E-mini futures today said to consider being long above 2017. Okay? 2017. All right. I'm going to show you right there. Oh, boy. Oh, boy. 2017. Let's shrink this up. It's taking up too much room. Okay? You with me? 2017. For those of you that are new to all this, that means you get an email. Concierge trade alerts are emailed out each evening. As soon as I finish this video, I'm going to email out tonight's concierge trade alerts to all those who qualify to receive them. The one trade a day, those are not emailed, those are published each day. All right? So I'm going to go through the concierge trade alerts first, then I'm going to come back and do the one trade a day. Consider being long above 2017. The first move up ran 8.5 points. The S&P 500 pays $50 per point. We have a daily goal here of $100 per market. No, $100. That's our entire daily goal. See, we don't put unrealistic expectations in your head. We don't tell you how we're going to teach you to make $4,000 in your boxer shorts before breakfast while reading the sports page. That's nonsense. We're going to give you goals that are definable, attainable, achievable, measurable. This is going to allow you to develop confidence that you can learn how to trade and you can learn how to be consistently profitable if you learn how to think in probabilities and if you learn to apply yourself with discipline. Okay. Important prices and important areas are almost always tested. What does that mean? I say it every day. I probably say it 100 times a week. What does it mean? It means price triggered the alert 2017 once. There's a high probability it's going to come back and trigger it again. It did. This time it ran up 13.25 points. Now, we use an 8-tick hard stop in the live trading room. If you took this trade, okay, if you got triggered in here and off it went, you didn't get stopped out. I'll tell you where you got stopped out. You got stopped out on this pullback here, okay? But you got stopped out with profit, which is a good thing, a very good thing. Now, this 1 hour move went from 2017 to 20.30.25. And so the market made 13.25 points available. You didn't get 13 points because, or 13.25, because you didn't know that's where the market was going to reverse. You had, hopefully, a 2-point hard stop for the bulk of your position, or if you're just trading one contract, you had a 2-point hard stop, period. And if you didn't get it over here, you got it here. Okay? Now, if you are a more experienced trader, if you've been around the block a time or two, you understand technical analysis and technical trading, given this entry at 2017, you would have possibly placed your stop loss just below the most recent swing low. So while we give you a hard target and a hard stop and an exact entry, we also give the more experienced trader the flexibility of establishing their own hard stop. Got to have a hard stop, whether it's our hard stop or your hard stop. If it's your hard stop, it should be just a couple ticks below the most recent swing low. So what that allows you to do is, when price pulls back, you don't get stopped out. You get to take advantage of all this. From 2017 up to 2051, 2051 minus 2017 equals 34 points. 34 points times $50 per point equals $1,700 per contract. Okay? $1,700 per contract. Now that's going to be the Concierge trade alert. So, tell you what I'm going to do. Because I don't want to use CTA because that stands for Commodity Trading Advisor. I'm just going to use CT, which means Concierge Trade. Okay? $1,700 is what the market made available. If you're the guy who can put a stop here because you have advanced knowledge of the market, you're either still long the trade and you're into overnight margins, or you closed out your position at the end of the day, which means up in this area somewhere. So you had a beautiful day. Okay? So I said I would go through the Concierge trades first, then I would come back and talk about the OTADs. All right? So next on the agenda, is the Dow, the YM, long above 17,200. Let's go have a look at that. All right, here we go. 17,200. Now the Dow, unlike the S&P, which pays $50 a point, the Dow pays $5 a point. You need 20 points to make your $100 per contract per day. Now this first move up right here to 17,245. I'm sorry, this candle, the first hour, 17,226. So 26 points. You only need 20. If you're a Dow trader, you're done for the day. If you trailed your stop into the next trade, you had a shot at 45 points. If you kept trailing, you had a shot at 49 points. And then, important prices, important areas are almost always tested. And so, as we re-trigger, okay, it's a new dawn, it's a new day, same day, but you get my point. 81 points. 81 points times $5 per point, it's a little over $400 per contract. Margin required to trade the S&P, the Dow, and the Russell is only $500 per contract. It's a pretty good deal. Now, the more experienced trader might have put his hard stop just below this previous swing low as we triggered, and he just might have rode this thing up for 200 plus points. If all you did was take 20 points out here or 20 points out here, congratulations, you did exactly what you were supposed to do if you're trading the 2420 blueprint. $100 per contract per day. The blueprint will teach you how to build your account size and help you mature as a trader over a period of 24 months. The goal is to take you from 1 contract to 20 contracts in 24 months. Okay? All right. Now, the next trade on deck would be the Russell, long above 1142. Okay? Let's go to the Russell. 1142. Okay, this first move up made $400 per contract available. Important prices, important areas are almost always tested. Now, you could run an 8-tick hard stop the way we teach you. Oh, by the way, this was another trade here that I didn't even mark because price got below the trigger and ran again. Now, the swing high here is 47.40. So from 42 to 47.40, that would be 54. Oh, silly me. I already wrote it. 54 ticks. Okay. Price gets below the trigger. Off we go again. Now, if you're trading by the 2420 blueprint, 8-tick hard stop. If you're that more experienced trading guy, your hard stop went right there. Okay? Since the Russell pays $100 per point, S&P pays 50, Dow pays 5, Russell pays 100. There are 10 ticks to a point. In the S&P, each tick pays $12.50, so you only need 8 ticks to hit a point. In the Russell, there's 10 ticks to a point. At $10 per tick, you need 10 ticks to hit a point. Okay? Now, when price goes from 1142 to 1152, Guess I need to scoot that up. Okay. From 1142 to 1152, that's $10. Or 10 points. Now, each point is worth $100. So 100 times 10 is $1,000 per contract. You put up $500 margin. The market made $1,000 available for that one contract. In fact, it went well beyond. It went all the way up to 1155.20. So from 42 to 52 is 10. Another 32. So this was 132 ticks. $1,320 per contract. But again, nobody gets out at the exact swing high. And so, trailing your stop, you got out. You may have gotten out here or here with your 1 point for the day. You did exactly what the blueprint tells you to do. If you did any of the other, that bell's for you too. Okay? All right. Next. After the Russell, crude oil. Crude oil was the first market today to provide us with two-sided action. What does that mean? It means you were able to trade it on both the long and the short side. On the long side, we said to be long above 41.25, short below 40.50. Here's 41.25, and here's 63 ticks later. At $10 per tick, 10 ticks, actually crude oil is 100 ticks to the point. Now, let me try to explain this. When the price of crude oil goes up $1, look here, from 41.25 to 42.25, right there. See that? 41.25 to 42.25. That's a $1 move in the price of crude oil per barrel. As a futures trader, that's a $1,000 profit for you. Now, we only risk 8 ticks on every trade. This thing ran 100 ticks. We only risk 8. If you were the experienced trading guy, your stop loss could have been way down here, but chances are you dropped to a smaller time frame, and I'm going to venture that your stop was somewhere in this area. We work with an 8-tick hard stop. In fact, we're so aggressive that once we have 4 ticks profit in a trade, we move our stop to break even. At 5, I like to lock in another tick to pay the commission, and then just keep locking it in. Keep locking it in. Eventually, price will come back and stop you out with your profit. So the first trade ran 63 ticks. Maximum potential available in that move was $630 per contract. Now, I keep saying per contract. In some markets, you can trade an almost unlimited number of contracts. In the S&P, crude oil, gold, the euro, especially during what they call RTH, regular trading hours. You see, we trade around the clock. Certain markets are not really tradable at midnight, 3 a.m. in the morning. The Dow, the Russell, the great markets, but the bulk of their volume is contained inside of the 9:30 a.m. to 4 p.m. time frame. Okay. Important prices, important areas are almost always tested. So look what happens. First we do the long side, then we do the short side. Short below 45.50. We drop 43 ticks. It's $430 per contract if you got out at the exact swing low. These are hourly candles. Look at this beautiful little double bottom here. Some traders get excited by stuff like that. I do. All right, so price starts to move up. It triggers. Okay, it gets up to 41.37. So from 25 to 37, that's 12 ticks. How many, this little move here is 12 ticks. How many do you need to be done for the day? 10. That's it, just 10. Price gets back below the trigger, does it again. This time it goes all the way up to 41.59. So from 25 to 50, that would be 25, and 9 would be 34, or $340 per contract. And then this one gets below by 3 ticks. See the little nubbin down there? Little wick. Off we go. This time we get all the way up to 69. So that's going to be 25 plus 19. I believe that's going to be 44, or $440 per contract. So some beautiful, beautiful back-to-back trades. Now, when we go from 41.25 to 42.25, that's $1,000 per contract per day. Okay? You with me? That's the Concierge Trade Alerts for crude oil today, Monday, 16th day of November, 2015. Let's move on to the next market. And the next market is the euro. Long above 107.30 and short below 106.80. Now, I know I explain it every recap, but in case there's someone new, the reason there's two sides to every trade, I have learned to take my bias, I've learned to take my opinion, fold it up, and stick it in my back pocket. Why? Because occasionally I'm wrong. No matter how convinced I am the market's going higher or lower, by golly, sometimes it's done the opposite. And so after I do the simple trade, the one where I actually believe it's going in that direction, I then spin my baseball cap around pointing the other way, brim to the back, and then I force myself to go through the same math, the same calculations, the same strategy to arrive at the number where I want you to enter the market in the direction that I don't even think the market's going there. That's a lot more difficult to do. But I do it. I do it for you, and I do it for me. Me, so that I can sleep, not worrying if the market's really going to go up or really go down the way I have prophesied that it is. See, I'm pulling the prophecy out. I'm pulling my ego out. I'm telling you that, yeah, I got an opinion like everybody else, but I don't really know where the market's going to go. Using my technical analysis tools, I do a pretty good job of pinpointing it when I go out on that limb, like I did the other day with the dollar trade, and like I did this past week with the gold trade. I'll show you those in the video real quick. But I like sleep. I like to rest. I like to have peace of mind, knowing that whatever happens with the market, if there's a natural disaster, a man-made disaster, I've covered you with the best possible trade I can in both directions. Okay? All right, so that's crude. We got to go to the euro. Concierge Trade Alert said to consider being long above 107.30. $107.30. There we go. All right. This first move up took us to 107.35. Then we had a drawdown, which took us to 107.29. So there's no stopping out here. Oh, this one right here, this one did stop out. Okay, whenever there's a stop out, I'm always going to show you. All right, looky here. We move up 5 ticks. We move our stop to break even at 4 ticks, so we get stopped out at break even. We also get triggered back into the trade, and it runs 32 ticks. The euro pays $12.50 per tick. So if we go 32 times $12.50, then we have, sorry, my 32 times $12.50, that's $400 exactly. Okay. It's a $400 per contract move. Important prices, important areas, almost always tested. This time, we run up, what do we got? 36. So it goes 6 ticks in our favor. We move our stop to break even at 4. And maybe you locked in 1 or 2 ticks, but yeah, let's just call it a break-even trade. Nothing wrong with that. It's the truth about trading. All right, and so we close here, and we pop up here. We go to 735. It's another break-even trade. Nothing wrong with that. Next move goes 20. Next move goes 11. Next move goes 16. And the short side trigger on that was 106.80. Now, interestingly enough, and I could just skate right past this and not mention it, but I'm not, because it's the truth about trading. The short side of the trade, which didn't trigger all day long, was 106.80. Okay? Now, look at the swing low here. 106.78. So what is that, 2 ticks? That's a stop out. I'm sorry, but that's what it is. Stop out. Important prices, important areas. Now that one drops to 106.70. So from 680 to 670, that's 10 ticks, right? At $12.50 per tick, that's $125 per contract. So you had 1, 2, 3, 4 opportunities on the long side, and you had 2 opportunities on the short side. One of your long opportunities got stopped out, and one of your short opportunities got stopped out. We'll come back and talk about the OTAD in just a few minutes, because we're almost done with the Concierge Trade Alerts. All right, next will be gold, GGCZ5, long above 1090, and short below 1085. Look at that euro, man. That thing's dropping nice. So I gotta get through this so I can get the new alerts out tonight. Now, see, the reason this short trade's still valid is because the trades are valid. Both the OTAD and the Concierge, they're good around the clock until the next set comes out. So, there you go. All right, let's go to gold. Here we go. All right. Gold was the first trade to trigger last night. We said to be long above 1090, short below 1085. Here we trigger at 1090. The very first move takes us up 17 ticks, or $170 per contract. Right there. If you're a gold trader, that's your market. You were done for the day. One and done. Almost every market today gave us one and done. Important prices, important areas are almost always tested. And so on this test, we run up to a swing high of 1093. That's 30 ticks, or $300 per contract. Okay. Now, That experienced trader who's going to use a little bigger stop, more than just the 8 ticks that we use each and every day, he's going to put his stop right there. He's going to ride this thing up. $740 per contract potential, depending upon how closely he trails his stop. He could get stopped out here, could get stopped out here. If he were psychic, he could get out at the exact swing high, but I'm not, you're not, so let's not try, let's not cry over money we left on the table. Let's take what we can take. Now, you got to remember, while we give you an exact entry and a hard stop and a hard target, and we teach you the flexibility of trailing your stop, the market is what makes these trades available. Like here, the $740 per contract potential. We didn't do that part. That's what the market did. Market said, here's $740. Want to get paid? You could say yeah and take that, or you can trail your stop because it might go to $1,000 per contract per day. It could go to $1,500 per contract per day. And so you're trailing your stop to see just how far it might go. In doing so, you assure yourself that you're going to get stopped out somewhere below the swing high. That's okay, because you're getting stopped out with profit. And profit is a good thing. Profit's nothing to be ashamed of. Money's not evil. It's the love of money that causes man trouble. Important prices, important areas. See how price is like it had to come all the way back down, do the turnaround, and off we go again. This time we get up to 1093.60, so that's 36 ticks or $360 per contract. This one didn't, it needed to go 2 ticks lower to qualify for a reset. And the alert on the short side, 1085. The first move down, we get to 1083.70. So that's going to be, let's see, that's going to be 17 ticks or $170 per contract. Price gets back above. Actually gets back above here. Drops here. And so this is 1038. I'm sorry. The low is 1083.80. So that's 12 ticks or $120 per contract. The next move is 13 ticks or $130 per contract. And the next move is 17. The next one leads us from here all the way down to the swing low here at 1080.50. Now, from 1090 to 1080. See, this was 1090. If we'd have got up to 1100, that would have been $1,000 per contract. But we didn't. So from 1085 down to 1080, that's 500. That's half as much, right? We'd have had to go all the way to 1075 to do the 1,000 on the downside. So what exactly do we have? At 1080.50, we have 45 ticks, or $450 per contract. Now, don't forget that trade, and 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 that trade. Okay? All good trades. Okay. Last but not least, we've still got bonds and soybeans. That's the only ones we haven't covered yet. So on the soybeans, or I'm sorry, on the bonds, the alert said to be short below 153.27. Did you see that? 153.27. Now, this initial move here got stopped out. Plain and simple. Next move down gave us 13 ticks. The next move down gave us 15 ticks. And that has changed since I put 15 there. This actually dropped to 153.03. So that's 24 ticks. Now, bonds pay $31.25 per tick. There are 32 ticks to a point. From 153.27 to 152.27, that would be $1,000 per contract. Didn't quite make $1,000 per contract today. The market did not make $1,000 per contract available today, but it did make 24 ticks available. And 24 times 31.25 equals $750 per contract. Okay, last market, soybeans. ZS. Oh, you know what? I had to take over. I can do it here. I'll just get rid of everything. Oh, don't do that. Delete. Yes. Delete. Yes. ZSF. ZSF. Soybeans. Okay. Okay. All right. Now, earlier I was having a problem with the 4-tick range chart. I don't know if I'm still having... Nope, no problems. Problem solved. Stop. All right. Soybeans were long above 865. We can see that didn't happen. Or short below 854, which did happen. I remember. Let me just scrunch this up. And I'm going to just take a shortcut here and drop 854. Okay. Is that right? Yeah. Okay. Today's the 16th. Okay. So 854, the hard stop is 856, okay? And so we trigger, we have a drawdown, we don't stop out because we have a 2-point or 2-penny hard stop. To hit our profit target, we need to get down to 852, which is right here. And as you can see, we do it, and then we turn around and we do it again. Okay. Then we get triggered in and we get stopped out. And that's it for soybeans. Okay. So, with that said and done, we're now, well, let's just recap real quick. The S&P was beautiful. 8.5, 13.25. $1,700 per contract potential. The YM gave us 237 points potential, along with 26 and 81. The Russell gave us $400 per contract, and $540 per contract, and then $1,000 per contract. Okay. After the Russell, let's go to crude oil. Crude oil gave us 63 ticks, $630 per contract, $43 per contract, and then $1,000 per contract on the day. Euro, on the long side, 32 ticks at $12.50 a tick, 20, 11, 16, and on the short side, turns out with the euro, this one was interesting today. This doesn't happen often. Oh no, I'm sorry. I misspoke there. We had a stop out, and now we've had a drop from 106.80 to 106.64. 16 ticks times $12.50 per tick. So a great way to wrap up the day on the euro. Soybeans, we had a stop out and two beautiful trades. Gold, we had 17. And then we had this other nice trade, and then we had $740 per contract. Then on the short side, we had 45 ticks or $450 per contract. So the Concierge trade alerts today, my friend, were just, gosh, as good as it gets. Now, we offer those at both a quarterly rate and an annual rate. Michael has a special right now, if I'm not mistaken. You'll have to check with him. 949-42 E-mini, support at cfrn.net. Something to do with the partnership, and you get a bonus on one or two of these other programs, the one trade a day or the Concierge. Now, real quick, we're going to go through the one trade a day. Okay, the one trade a day alert on the S&P. Now, the difference again, the Concierge trade alerts are emailed out at night. You know, that's what I'm getting ready to do here. As soon as I finish this video, I'm going to email the alerts. One trade a day alert said to be long at 10:30 a.m. Eastern. I posted to the website, and people with the password logged in. They placed their order to buy 2037 on a stop. Now, I want you to understand that when I put that out, it was right here on this, at the beginning of this candle, 10:30 a.m. Eastern. That's when I published the trade. It didn't trigger until 1:30 in the afternoon. But then look what happened. It went from 2037 all the way up to 2051. 2037, 47, that's 10. It's 14 points. We look for 2 points a day on a 5-day week. That's 10 points. This one OTAD trade on the S&P today was good for almost a week and a half's production. Remember now, after tonight, there's no price increase protection. As the demand continues to escalate, because, I mean, let's face it, with these kinds of results, the demand is going to grow, and, of course, in business, the price is based upon what, the market will bear. I'm just speaking to you in very truthful terms here. So, if you think you're going to become a one trade a day trader, then locking in the current price forever, in perpetuity, it is meaningful, all right? So, I'll leave it at that. Next would be, here, let's just walk to the right, and we'll do them that way. Bonds. All right. The one trade a day, I'm going to have to actually look these up, some of them, because I don't have them marked on the chart. so my apology for that. I think I am, if my browser cooperates. Okay. The super secret website where you go to get your trades is e-minifuturestrading.com, but then you have to know the password so that you can log in. You'll be greeted by some beautiful guitar music, a little flash intro. Now this site is not meant to be SEO enriched or pretty, or this is a utilitarian site. It's designed for one purpose and one purpose alone, and that's to make sure you get your trade alerts. So I type in my username, I then type in the password, hit login, and there we have short below 153.05. 153.05. The swing low was 153.03. So the bonds today, after that incredible performance that we had from the S&P, bonds got stopped out. We only risk 4 ticks on bonds because we're only looking for 4 ticks because they pay $31.25 per tick. That's the truth about trading. You know, when I said on the show today that we don't sweep anything under the carpet, here's a perfect example. I could have skipped right over that. I doubt anybody would have noticed. But I would know. See? And so, for that reason, it matters. Okay, crude oil. Type in my password. Okay. What do we got? Long above 41.30, short below 39.70. So 41.30 is right here, very close, very close. 41.30 was the OTAD price, 41.30. Now, the $950 per contract, that was the value. Once again, getting long crude oil at 41.30 produced $950 per contract. See, the 41.30 line is going to be right there. Now, that trade came out at 10.30, way down here, right? Triggered 41.30. It triggered the first time here. So we had a couple different triggers. We had a break even, and then everything else was profitable, leading up to $950 per contract. Okay. Next will be the euro. All right, back from a short break. Time to go to the euro. Man, we're almost done. Okay. The OTAD said to be short below 107.00. There it is. Now, remember, the alert itself came out at 10:30 a.m. Eastern. They are published to this website. From the home page, you go, you enter your password or your username, and then you enter the password of the week for that particular market. Changes every week. Okay, the OTAD on bonds, short below 153.05. On the euro, back to the euro, the OTAD was 10700. We put in a swing low of 10678. I'm sorry, is that right? 10678. So that's 22 ticks times 1250 per tick. So if you are a one trade a day subscriber and you subscribe to the euro as one of your two markets, it's a minimum of two, that move is worth $275 per contract. No one gets out at the exact swing low or swing high, but if you're trailing your stop, you get taken out somewhere along the way. Important prices, important areas are almost always tested. There's a test, test, bang. Now, it's a two market minimum, $150 per month. You can lock that in forever if you want. If you don't want to, then we're not raising the price this week. I don't think we're raising the price next week. So this isn't like some high pressure sales tactic to, force you to sign up right away if you don't want to. Let's face it, for the price that we charge relative to the opportunities that are created, you can wait as long as you want. I mean, if we were charging $1,000 a month for this service, considering that you get two trades every day, if you sign up for just two markets, that's the minimum. You can go 2, 4, 6, or you can take all 8. Okay? All right. So the next one is bonds. And the OTAD on bonds was a stop out, 153.05. Now where's the 1030 marker? Here's 10. Oh, this is hourly. Let me break this down to 30 minutes. There we go. Okay, now where's 1030? There's 1030. Okay. The long side didn't get triggered. Well, fair enough. Okay. So there's a stop out on the short. And so, to make a long story short, on the one traded days, the S&P was absolutely awesome. Bonds, we got stomped out. Crude oil, almost $1,000 per contract. The euro, $275 per contract. Soybeans. Oh, you know what? We didn't look at the soybeans through the OTAD lens, did we? We did not. So let's do that. Thought we might be missing one. Felt like we were missing one. Soybeans. Okay. $8.58 and $8.54. There's $8.54, but you can't start until 10:30. 10:30, 10:30, 10:30. Aha. This is the 10:30 right here. $8.54 to $8.58. Okay. 858 to 860. That's 2 pennies. Okay. 858 to 860. On the other hand, where's the 1030 candle? Okay, the alert came out here at the beginning of this candle. And what happened? It tripped 1054 and put in a swing low at 53.75. So even though we drop it a tick, it still touched it. And so you just got to count that as a stop. So it is what it is. Now, one thing we haven't talked about, I'll come back to that in just a second. Let's see. The Dow, the one trade a day, was 17,320. And we put in a swing high at 447. So 447 minus 320 is 127 points times $5 per point is a max potential of $635. Trailing your stop on this one was pretty simple. The max potential would be $635 per contract. Is the Dow a market where you could trade 10 contracts? I mean, is that possible? Let's take a look. Now, you'll notice there are times of the day you don't want to be trading. Once London opens, there's 2,000, 800, 2,900, 2,500. Here's the Wall Street open. Okay, so now at 10:30, okay, so this is the candle when the alert went out. Okay, we triggered long at 17,320, and in the hour that we triggered, there were 6,614 contracts traded. And the next hour saw 4,500, 5,800, 6,200. So, could you trade 10 contracts? Yes. Now, if the maximum potential of this trade, based on the one trade a day, long, 17,320, I forget. Let's see. We said the maximum potential was $635 per contract. Obviously, if you're trading 10 contracts, that becomes $6,000. The margin required to trade one Dow contract is $500 with most brokers. Now the points, 635 divided by $5 is 127 points is what was available. Okay, 127 off the OTAD. Opportunity at 600 plus per contract. Of course, you're not going to get out at the exact swing high. Now, I said it before, might as well say it one last time before I close out this video, because we're done. We've covered, did we cover the OTAD on the goal? You know what? I don't think we did. So let's fix that. CFRN and password is, I can't say it out loud, then it wouldn't be secret. It's the secret password. Okay. All right. So we're going to be long above 87. We're going to be short below 82. 82. Here's 82. Well, let's go find 1030 right here. Okay, so we don't get above 87. We do get below 82. Now 1030 is way back here. This is when the alert goes out. We trigger in this hour. Here. I'm just going to make it simple on this very last one. 1082. Swing lows 1080.50. So that's going to be 1.5 points, or $150 per contract. And if you happen to trade 10 contracts, if you've earned the right, well, it's $1,500. Trading's risky. You really can lose all of your money and then some. You really should consult with a licensed investment professional before making any investment decision. Also, you should go to our website and read our full-blown disclaimer. CFRN.net, all the way to the bottom. Disclaimer. Want to trade futures? Are you crazy? Required reading for all visitors to this site. This covers everything from soup to nuts, even the testimonials that we have on our site. Those are real testimonials from real people. We keep the originals on file. You know, we just have zero desire to blow smoke up your chimney. There's too many people in the world who really want to learn how to trade and who really do recognize the opportunity that we offer, that we go the extra mile, that we really do care, that our goal is greater than our own personal gain. Oh, I'm not saying that we don't want to make money. Of course we do. I mean, there's a whole lot of ways to make a living that aren't nearly as stressful as trading. So, you know, we could have chosen a different path, but this path sort of chose us. I'm not going to go into our long story here. Most of you have heard it before. I do want to encourage you to come take a free trial. If you've never done that, go to cfrn.net/apply. If you've taken a trial in the past and the computer turns you away and says, hey, you already took the trial. If it's been 6 months or more, just send an email to support@cfrn.net and we'll send you to our second chance link, give you an opportunity to take a second go at it. Now, if it's been less than 6 months, if there was some extreme extenuating circumstance that prevented you from really taking advantage of the trial, or maybe, I don't know, if you want to be honest, you could say, you know what, I was there day one, I got confused, I didn't think I could do it, and I never came back. I've since gone out and seen other things, and wow, what you guys offer, maybe it is simple, and maybe you really are telling the truth. And maybe I do owe it to myself to take a closer look. Maybe I actually should download the platform and the indicators and, you know, put on and take off trades in the simulator the way you suggested the first time, so that I can determine whether or not this is something I can really learn how to do. Because I really feel called to being a trader. I really do want to trade for a living. I really feel this is what I'm supposed to be doing. But I keep going down these blind alleys. I keep running into these financial thugs lurking behind, you know, every bush on the yellow brick road that leads to the Emerald City called Wall Street. So if you're tired of the games, the gurus, magical this, the mystical that, and the secret codes, and all the other stuff. If you just want to learn how to trade, it's like, man, could somebody just teach me how to trade? That's where I was in 2007. Could somebody just teach me how to trade? Now, I met Michael in '06, but our friendship was just beginning, and he was ahead of the curve. He was ahead of me. I learned quite a bit from him. I learned from Mike Reed. David taught me to look at larger time frames. And I will say that there was some divine guidance. And by that I mean, I didn't hear any voices or I didn't see any visions, but I do believe that I felt that I was in His will for my life. And I say that because as I came upon obstacles and heartaches and problems and whatnots, I had the inner strength to keep going. And if I were running on my own strength and my own strength alone, man, I would have given up so many times. But I never did. I thought about it. I dreamed about it. I dreamed about what it would be like to not have to go to the office and put on another trade. I dreamed about that. But I knew deep down inside that was not my future. My future was trading in the markets. And it wasn't too far into the learning process that Michael and I, and this sounds so cheesy, it's got to be true, we made a commitment to each other that if we ever, quote unquote, broke the code, that we were going to give back and that we were going to share our knowledge with others. Now, he and I taught for free almost 4 years till it reached a point where it consumed our life so greatly that it was either abandon it, go back to trading live together 1 day a week like we did in the beginning, or build the greatest trading company on planet Earth. Aren't you glad we chose the latter? I know I am. So that's it, guys. You've seen the best of what we have to offer today. Michael gave you a full recap of everything that happened in the live trading room on the radio show today. I've now given you the very best recap I could of everything that happened with the Concierge trade alerts, also with the one trade a day. If there are any questions that I can answer, support@cfrn.net, and we'll be burning the midnight oil, taking your calls right up until midnight Eastern at 949-42 E-mini for all those who do want to become a part of the one trade a day. You want to get grandfathered in so that I'm talking 10 years from now, when the price is 10 times what it is today, or 5 times, or whatever it is, you won't be affected. You'll be locked in. Okay? All right. That's it. God bless. Have a great evening, and I hope to see you tomorrow morning in the live trading room. Take care.